Now, the UK economy has been in the news since the citizens voted to exit the European Union in June this year. Recent figures from the Statistics Office show inflation rose to 1% in September, up from 0.6% in August. Brian Sturgis is the chief economist at the World Economics, and he joins me from London. Brian, it's good to have you on the show. Okay, and now this is the highest inflation figure in almost 2 years. Tell us about what would have triggered the rise in inflation.
Well, there's a few things. One is clothing, which is difficult to measure anyway for all sorts of reasons. The other one is petrol prices in hotels, which is not a huge sector. But we're talking really about a move from 0.6 to 1, so it's not actually enormous. It is the biggest for a while. It, however, has not had anything to do yet really with the fall in sterling. So there may be more inflation coming through. But you've got to remember that the target of the Bank of England is 2%. And for the last few years, the big fear has been deflation rather than inflation.
And now, let's talk about the pound. Of course, that has come under pressure, immense pressure, since the Brexit vote. How did this contribute to this rise in inflation?
Well, it hasn't as yet, because the figures are too early. I mean, the big collapse was really the end of August, September, and this is the September figures. So, they're looking backwards. So, the actual fall in the value of sterling we've seen recently should contribute to higher inflation figures in the next couple of months. But they really doesn't really have much to do with this one.
Okay, let's talk about the jobs report. Jobless rates, we're told, held steady at a near 11-year low of 4.9% in the 3 months to August. It seems this wasn't affected by the economy, was it?
It wasn't. I mean, also, as long as earnings don't rise, particularly in the next few months, and if you see a small rise in inflation, this effectively means that real wages rise, which is good for employment figures. It's not necessarily good for the people who are actually earning less money, but it does mean employers are more likely to take more people on. So as long as inflation doesn't start to rise too rapidly above, a little rise in inflation should help the employment rate.
Now, some earnings released by FTSE 100 companies like Burberry show that there's been a decline in profit. What do you make of their numbers?
Well, I haven't looked at those too closely. I mean, not Burberry is because of sales outside of the UK. I know they had problems with sales in China a while ago. I mean, I have to say I haven't looked too closely at them, but profits themselves have been at a high for quite some time, and the profit rate has been coming down.
Okay, talk to us about your outlook for the rest of the year for the UK economy.
Well, the UK economy is still remaining reasonably strong despite the Brexit fears, and a little bit of inflation will not harm it. Certainly, the fall in sterling will be good for our exports, if not necessarily good for the inflationary side. But the big dangers are coming out of Europe. The Europe is still growing too slowly. The US economy should continue growing for a while, which helps Britain. But I don't see any really headwinds for Britain until 2017.
All right, thank you so much, Brian Sturgis, Chief Economist at the World Economics.
A pleasure.
And Yahoo's profits more than doubled in the last 3 months, a boost for the beleaguered firm whose plan to sell its core business was thrown into doubt. Verizon Communications agreed to buy Yahoo for $4.8 billion, but disclosure of a huge data breach put a question mark over the deal. In the quarter to 30th of September, Yahoo's profits rose to $163 million from $76.3 million last year. on revenue, up 6.5% to $1.3 billion. Chief Executive Marissa Mayer said the figures underlined Yahoo's value. Revenues from mobile operations during the quarter reached $396 million, up from $271 million the previous year.